everyone joining up from around the world, whether you just watching us, midway through your trading sections, or winding down for the night. Welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream section. My name is Daisy, and I will be guiding you through the exciting 2-hour journey as your host. Today's live streams is not just a presentation, it's a conversation. It's a window into the engine room, one of the most fast-growing and forward-thinking funded trading firms in the industries. And of course, I'm not here alone. I'm joined by two remarkable guests who have shaped what WeMasterTrade represents today. Skilled traders, mentors, and role models within our community. First, let me introduce the ever-composed, always insightful scholars. Welcome, scholars.
Thank you so much, Daisy. Hello everyone, and thank you for spending your time with us. I'm truly looking forward to today's sessions. There's so much to cover, not just about trading strategies or rules, but about the full ecosystem that WeMasterTrade offers, from how you can start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trades, it builds traders.
Absolutely, and next to her is someone who brings sharp analysis and clarity to every chat and conversation. She is strategic, she is sharp, and she is a real frog in our trading space. Please welcome Helen.
Thank you, Daisy, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me the most about today is that we're going to unpack everything, not just what WeMasterTrade offers, but how traders can truly take advantage of each part of our system, from packages to promotion to scaling and long-term profit sharing. If you ever had questions, even doubt, today is the day to ask them.
And that's exactly what we're here for. Whether you are brand new to WeMasterTrade or already a part of our funded trader programs, today's live streams is going to give you the full pictures, not just the highlight reels. Over the course of the sections, we are going to walk through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we are doing things differently from traditional broker or prop firm. Now, I want to be clear. It isn't about sales, it's about understanding. We want you to know what you are signing up for, what kind of structure support of your journeys, and how you can use that structure not to just suggest but scale.
And speaking of structure, we'll begin by sharing the story behind WeMasterTrade. How we were formed as a funding project, not a broker, with a very important distinction. Unlike broker who profit from volumes or lot, WeMasterTrade built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from that philosophy flows everything we offer, especially our trading packages, which we'll be discussing in detail. We'll explain the logic behind each one and what kind of trader they ever looked at our packages and thought, which one is right for me. Today we'll answer that.
And more than that, we will also do apply comparisons between packages. We will break down pricings, account size, maximum drawdowns, consistency rules, and even payout side by side to help you make a fully informed decision. It's one thing to see numbers on a website. It's another thing to understand the intention behind them.
Alright, and when you understand the packages, the next question is always, how do I stay compliant while trading? So we will move naturally into the question trading rule, which honestly is one of the most important parts of today's session. We will explain what is the daily loss limit is, how it's calculated, why it's includes both flow and floating profit and loss, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we will even address common misunderstanding about trade sizing and recurring trade policy.
And we won't just explain rules in isolation, we'll explain them in the context of live trading decisions. I'll share some personal examples of mistakes I made when I first started trading under funded conditions and how I adjusted, because rules aren't meant to restrict you. They're there to protect the integrity of your growth.
And while we are on the topic of helping you suggest, we will guiding you through our current promotion plan, including limited time discount counts, trader support campaigns, capital opportunities, and how to properly qualify and submit proof. We've had some amazing response to our promotion, but also some confusion. We will showing you exactly what to do step by step.
And from there, we will transition into a discussion on our scale plan, which I personally think is one of the most underrated part of WeMasterTrade offering. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't get just payout, you actually unlock higher capital tier. It's not just about getting funded one, it's about enrolling to six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit-sharing model. This is the heart of what makes us different from profit. When you trade on funded accounts and generate profit without breaking rules, we share that profit with you up to 90%. But there's more to it than just the percentage. We'll explain the full payout cycle, thresholds, and timelines today.
Now, I know many of you watching today aren't just traders. You are also educators, influencers, or people with a lot of networks. That's why we are also taking time to explain our affiliate program, and we will do it transparently. We will walk you through how commissions are calculated, how affiliate of referral are tracked, and more importantly, what you need to qualify for payout, including a detailed explanations of two reference rule and minimum funding condition.
This is especially important because we want all of our partners to feel confident and clear about their earnings. We've seen a whole growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the term, and building long-term income stream.
So as you can tell, it's not just a surface level live streams. We are diving into everything: packages, crew, promos, scale pass, profit sharings, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decisions possible.
And we want this to be interactive, not just informative. So if you have a question at any point, please drop it in the chat. Our moderators are watching and will answer as many questions live as we can. Your voice matters.
And if you're watching on this on replay, don't worry, we will leave timestamp and summary below, and you can always reach out to our team with any follow-up inquiry. Our support team is incredible, and they really care about helping traders succeed.
To wrap up these welcomes, I'd like to say WeMasterTrade is not just a platform, it's a commitment to build real trader, to create fair, structured, and scalable pathway for people around the world who are serious about trading as a profession, not a game. So if you're here to grow, to understand, and to take action, you're exactly where you need to be. Let's dive into the journey together. Let's begin and once again welcome to WeMasterTrade live stream. Now before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full pictures of who WeMasterTrade really is, what we believe in, and why we built the platform the way we have. Because when you put in your trust and your tradings into the companies, understanding its philosophies isn't just helpful, it's essential. And so the assessment is about the origins, intentions, and impacts. It's about how WeMasterTrade began, what value underpin the firm, and how the value translate into the real tool and outcome for traders like you. And to work through that, I'm joined as always by two people who live and breathe the principle, Scarlett and Helen. Let's start at the beginning.
Thanks, Daisy. To truly understand WeMasterTrade, you need to understand why it was created. Like many platforms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give a capable traders access to capital regardless of their background, locations, or financial situation. We were founded in 2022 as part of WeMasterTrade Group, headquartered in Vancouver, Canada. While WeMasterTrade built its name on signal sharing, investor networks, and copy trading tech, WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it important to know, so WeMasterTrade is not a broker. That's not just a label. It's a foundational different. We don't broker from spread or commission. Our success directly tied to the success of our trader. That's why everything we have built, from our instant funded packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk. We will give the roadmap. You bring the skill. But we also know that skill alone isn't enough. While one of our funding principles is education first, we don't want the traders to blindly follow the rules. We want them to understand the logic behind the structure. That's why we will invest heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with course running from introductory trading psychology all the way to advanced risk calculations and multi-asset strategy design. The WeMasterTrade Academy isn't just about theory, it's about the implementation. We've designed the curriculum to map the real-world trading environment within WeMasterTrade, so what you learn you can apply directly to your funded accounts. And to ensure that our system and contents meet global standards, WeMasterTrade is proud to hold an ISO certification, which confirms that our educational products and trader development programs meet rigorous internationally criteria for quality, structures, and learner engagement.
That certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called platforms come and go, WeMasterTrade has positioned itself with a real operational stability, compliance frameworks, and internal accountability. We're not here for a season, we're here to help build careers.
And we have seen that commitment translate into real story. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, Philippines, South Africa are talking about how WeMasterTrade have them not just earn more, but trade with purpose. They talk about passion challenges after a year of struggling with a retail broker. They talk about finally being able to trade without the emotional burden of risking personal funds. We have students become full-time trader. We have a woman re-enter the finance world after career break. And we have a young professional from underbankers region finally accept the markets with a funded account. That's the impact, and that's what they write us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog section where our teams of experts and educators share quickly insights, trading psychologies, breakdowns, market reactions, and platform updates. We believe that learning never ends, and we keep our traders informed. But let's also talk about the cultures. What's WeMasterTrade's difference isn't just about the product offerings, it's the community's mindset. We actively promote trader integrity, respectful competitions, and knowledge sharings. Whether you are in a Telegram group, watching our YouTube series, or engaging with us online support, you will see that we actually listen.
And I'll speak honestly here, in many platforms, the trader is just a customer. At WeMasterTrade, the trader is the product. Your performance drives the business, your voice shapes the platform, and your consistency determines how far we can scale together. That mutual accountability is rare and is something we're proud of.
And if you ever doubted whether this path is real, whether the trading career is truly within risk, I encourage you to read the testimonial, take a look at our funded account, and connect with people who go through the system. The stories are real, the capital is real, and reasons speak for themselves.
And to summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education for trading institution. We are here to challenge the status quo of trading access, to build systems that rewards performance over promotion, and to create real, scalable income opportunities for traders around the world, regardless of their starting point. This is more than a platforms, it is a trading movement, and if you are ready to part of it, today's live streams will show you everything you need to know. Thank you, Scholars and Helen, for that deep and honest walkthrough. Coming up next, we are going to take these foundations and connect it directly to our actual offering. That means we will be discussing all the different account packages available as WeMasterTrade, how they differ, how they design for, and what kind of results you can expect from it. Now that's what we explore who WeMasterTrade and principle we stand for. It's time to move into the ones of the most essential parts of the live streams and in-depth discussions on our account packages. This is where it all begins for most traders, choosing the structure that's best aligned with their goals, their style, and their current skill level. And when we say packages, we're not just talking about the dollar figure, we are talking about the frameworks. Each package at WeMasterTrade represents a different pathway to work growth, and today we will walk you through all of them, what they offer, how they structure, and the most importantly, who they are designed for.
Exactly, Daisy. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we build two distinct product lines for traders, the challenge package and the instant funding package. Each line includes a variety of account sizes and configurations because we know that traders come with different strengths, risk appetites, and templates.
And let's begin with the challenge model, a two-phase evaluation system built for traders who want to prove their skill before being allocated capital. Each structural frame has become the most popular role for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a stimulate account and your goal is to meet specific profit targets while staying within strict but reasonable risk parameters. There are 3 stages in total, phase 1, phase 2, and then the funding stage.
Take for instance our $10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break this down phase by phase.
In phase 1, you need to achieve an 8% profit target, which is $800, without breaching a 5% daily loss, $500, or a 10% overall loss limit, $1,000. You'll have a limited time to achieve this. That's a key difference from many platforms. We don't pressure you with deadlines.
And when you pass phase 1, you will move to phase 2, where your profit target drops to 6%. That's 600. The rate will remain the same. And here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, once both phases are clear, you enter the funding account where you trade with real capital, have no profit targets, and your profit share jumps to 90%. That's one of the highest in the industry.
This is ideal for newer traders or experienced traders who want to start with a lower pressure and learn the system. If you're still refining your strategy or want to get feel for WeMasterTrade risk framework before scaling, this is perfect package to begin with.
Now, for those who are confident in their strategies and want to start with a lower account size, we offer $25,000, $50,000, and $100,000 challenge packages. The structure is similar, two phase, the same 5% dailies and 10% total lot limits, but the profit target scale proportionally.
For example, in the $50,000 challenge, you need to hit a $4,000 in phase 1 and $3,000 in phase 2. While the targets are higher, the leverage remains the same, 1 to 100, giving you room to adjust position sizing.
And the 25,000 to 100,000 challenge are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funded account. If you already passed all of broken challenges or have a strong verified trading history, this is a good step up.
Every challenge package comes with a one-time fee. For example, just $45 for the $10,000 challenge. This fee is refundable once you become funded and meets minimum performance conditions. And if things don't go your way, you are eligible for a 30% reset discount to start fresh. And if you don't want to go through a challenge at all, but instead want to accept real capital immediately and get it paid by purely on results, that's where our instant funding packages come into play.
And this is where WeMasterTrade truly set itself apart. Our instant funding model is designed to give experienced deep-sitting traders the chance to real capital from day one. No evaluation, no demo stage, just full live trading backed by structured, fair, and transparent pick system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences, and goals. Today we're going to walk you through each of the 5 main instant funded packages: standard, 51010, 510 510 no PC, and customized. We'll compare the details, but more importantly, we'll have you figure out which package is right for you.
Let me set the skins quickly. All of our instant funding packages give you a live trading access from day one. That means no challenge phase, no evolution. You pace one, follow the rules, and you are trading like capital. And every account, no matter the size, include no time limits, up to 90% profit share, scale up plan towards $1 million, support for EA, screen traders, cappings, and even XFD. Now, let's go pocket by pocket, and as we go, scholars and highlands, I want you to jump in with the real advice. Who should actually choose which ones, and what kind of trader you suggest we aid.
Let's start with the standard package. I always describe this one as the best friend for traders who just want stability. You get it up to $200,000 in capital with a very manageable 4% daily loss limit and 6% overall limit.
It's like that kind of static account that doesn't put you to overtrade. With the profits split up to 90%, there should be earning potential even if you're taking a slow and steady approach.
And how about the commission?
Well competitive across the board. Forex at $4 per lot, gold at $4 per lot, indices at $1, and stock at just $0.07 per lot.
And everything it allows: new tradings, capping, weekend holding, EA, SFT, you name it.
So for the audience, if you're someone who trade regularly, understand your strategies, wants a full range of access, and plan to play the long game, this is your sweet spot.
It's worthwhile for intermediate to advanced traders who already know their ads and don't want to struggle with the target-based challenge. And if you ever had an account loaded to unrealistic rules, you will find the standard model refreshing fair.
And I also say it suits swing traders. The 4-6% risk profiles give just enough flexibility to hold multi-day positions, especially with weekend holding fully allowed.
Alright, moving up again, let's talk about the 5-10-10 pocket. Same capital sellings up to $200,000, but now you get 5% daily loss and wider 10% overall limit. Why that's matter?
That execution is massive for traders who scale into the position or take multiple entries per setup. You got more room to breathe, especially in high volatility market.
And And the profit target here is also 10%, which aligned well with the risk window. Plus, you still get full support for escaping. EA's news trading is very trader friendly.
This is bad for day trader, especially those trade assets like NADA or gold that's move fast. If you got attached intraday strategy and just need some regretting room, this is your package.
And also for traders who want structure but don't like having that profit target, the clear milestone motivates some people, especially if they pay out oriented.
Now here's a personal favorite, the 5-10 euros. You get 5% daily and 10% overall loss, but no profit targets, none zero.
And that's a blessing for high precision traders. You're no longer chasing a number, you just focus on protecting your equity and growing capital slowly and safely.
This one is lovely by low frequency trader and sniper. If you enter trade from 2 to 5 trade a week, this is your space. You're not supposed to like for patient. You actually reward for it.
And who's it for? Veterans, swing traders, risk-conscious traders, people who prioritize consistency over speed. If that's you, you'll thrive here.
And let's be honest, not everyone wants to hit target. Some just want to trade well and scale cleanly to their home.
Now for the rule breaker, or rather, those who don't want to be evaluated on how even their profit are. The 5-10-10 no PC remove profit consistency tracking, right?
Exactly, same 5-10 risk profile, but you're not required to keep your profit growth smooth.
That's the trade copier are not allowed in this one, so it's a manual trade. The only and you need to trade responsibly. But for our reserve trader who sometimes hit misprice, this is display. And who is for? It's perfect for high risk reward trader or anyone who had issue with consistency rule at other firm. You trade how you want, just give it inside the rollout box.
And last but not least, the customized package. This is WeMasterTrade saying, you know what you need and let's build it together.
You can adjust daily loss, overall loss to your liking, plus you can fund up to $400,000, more than any other account.
It's premium, flexible, and come with all trading style allow, including EAs, new trading, weekend holding, SFT, and more. And who is for a top-tier professional, a cash fund trader, a signal riser, high volume trader, anyone with very specific structure in mind, this pack will let you build it.
I always say, if you try other models and nothing quite fits, build your own blueprint will customize. The freedom is rare.
And to sum up, every instant funding package we offer comes with a clear parameter, fair commissions, and deep market access, real profit potentials. There are no time limits, and payout starts early as 1 day in.
And no matter your strategy, escaping, swing, or go on manual, there's an account that aligns with you. The key is picking the right one now so you can start building consistency from the start.
And if you ever ensure our team is available in 24/7 to guide you, but the real secret, pick the account that fits your discipline, not your dream. The right fit always outperform the biggest promise.
Up next, we will walk you through exactly how to protect your accounts, avoid breach, and understand the key risks and consistency rules that power our entire platform. And let's talk about the parts that either make or break your accounts. That's right, it's time to dig into the trading rules and how to actually stay compliant when you fund it. And because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their accounts is coming down to one thing is the daily loss limit.
Yeah, the traders they a lot. It's the one rule trader thing they understand until it kick them out of their account at 3:70 p.m. on a random Tuesday.
But here's the good news. Once you understand how it works, really works, it becomes one of your best tools for risk control. So today let's break it down from top to bottom.
So what is the daily loss limit, also called maximum daily loss?
It's the maximum amount of loss you are allowed to incur in both floating and closed trades. While on any single trading day, if your equity falls below that limit even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's really important distinction and what trips a lot of people up.
Let's walk through with a live example. Imagine it is stocks of day 5. Your balance is $105,000. Your equities, however, is higher $107,000 because of open floating profit.
So 4%, if you're on a 4% daily loss limit, we calculate it off the higher number, $107,000.
So 4% of the 107,000 is around 4,000. That means your equity for the rest that day can drop below 103,000 and boom, the account is gone.
Right, and I think it's important to point out the system is waiting for close. It's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dipped below that threshold for even a second, that's it.
Now let's reverse it. Say at the start of the day 7, your balance is 100,000, but your equity is 99,000 because your open trade are slightly in loss.
Well, since balance is higher, we place the 4% on the initial balance of $4,000.
So now your equity must stay above $96,000 throughout the days. If it dropped to $95,999, auto liquidation kick in. No warnings, no more green call.
And what happens if you break it? The system will send the market order to close all trade. Everything is liquidated. Your account is disabled and you can't trade again unless you purchase a new packet.
And here's the kicker, the auto close happens when the system detects the threshold was crossed. But due to market fluctuation, your final profit and loss might be worse than the actual threshold. That's because the system executes a closure based on price slippage at the time of liquidation.
So even if you only intend to take a $3,900, once slip expire it goes on Nasdaq and suddenly it's $4,200. That's why we say don't break the ass.
Alright, let's talk about how to avoid violating this rule because this is where rule mindset kicks in.
First tips, know your buffer. Never blame trade to take you right off to the edge of your limit. Leave at least 10 to 15% room below the max losses, especially in volatile markets.
Tip 2, check your equity, not just your balance. I can spread this most traders stay at their balance already, but if you floated loss, it wreck your equity, you're heading toward a violation.
Tip 3 is use dashboard or tracker. Inside WeMasterTrade, we provide rich dashboard that show you live loss status. Use them and check them. Don't rely on memory.
Also, post trading after a big loss early in the day. If you lost 3% in the first hour of London session, maybe it's time to stop and reflect, not try to revenge trade your way back up.
Another big one, trade smaller during news hour. If you trade gold during NFP with a full loss line, you are practically begging to break the daily loss rule, get the position side and ride poor volatility.
And what are the top rookie mistakes you see when it comes to daily loss?
Well, number 1, over leveraging. Traders open positions that are 5, 6, 7% of their account thinking they close quickly, but if the trade turns red fast, it's already too late.
And number 2, holding overnight without checking exposure. If you hold 3 trades overnight and wake up up to 60 people, the daily loss could be here before you even open your eyes.
And the trust assuming that flow trades are all that matter. They are not. Remember, equities include both floatings and closest positions. The total equity lies in your score.
And I always say this to new traders, the daily loss rule isn't your enemy, it's your account airbag, so it's designed to protect you from doing something irreversible.
Exactly, it forces discipline. You can be aggressive with only within the box, and if you learn to trade inside dashboard, you will last longer than 60% of the market.
And one last note, it isn't about rules, it's about trust. We MasterTrade fund use because we trust that you will manage risk responsibly. The daily loss is there to protect that trust on both sides. And that's it all about daily loss rule. Before explaining the max loss rule, we will take a short break and we will be right back soon. Welcome back traders. In the previous segments, we covered the daily loss rules, and if you haven't already clicked at once, you are missing out. But now we move from the daily boundaries, so the absolute boundary. I'm talking about the maximum loss rule, also known as your account stop loss, the lines that can't be crossed, not just for the days, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rule works. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they chip away at their account and suddenly liquidation.
And the max loss rule is the last safety net. If daily loss is your daily seatbelt, then the max loss is your airbag. If the limit is hit, it means the account is deemed inflatable under your current volatility and is closed immediately.
So what exactly the max lot rules? Let's define it simply. It's the total maximum amount you are allowed to lose across all traders for the entire account if your equities, that is, your real-time trapped capital including open trades, ever drop below a certain percentage of your starting balance, your account is gone.
And unlike the daily loss, which resets every day, this one doesn't reset. It's cumulative. You can't lose 2% one day, 3% the next. And if your total loss crosses the line, that's it.
And the percentage limit depends on your packet. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you start with.
Let's work through a concrete example. Suppose you have an instant funding account with an initial balance of $50,000 and your max loss limit is 6% which is $3,000.
That means your equity can never go below $47,000 ever. Doesn't matter if you make $1,000 yesterday, the total loss from your highest point back down to that threshold is what matters.
And remember, this rule includes both closed losses and floating losses. And if you have loss at 2,000 in closed trade and you have another 1,000 in 200 floating in red, your equity now at 46,800. That's below limit. Account closed.
And just to be clear, it's not about the net gains or loss across trader. It's about the way your equity stands in real time relative to start lot floor.
Here's where it gets interesting and a little tricky. Let's say your account grows to $51,000. Congrats, you're in profit.
But your market loss limit is still way on your original 50,000 starting balance. So if your limit is 6%, the threshold is still the 47,000. What chance is how much room you have for before you hit it?
Exactly. Now you have the $4,000 in total buffer because $51,000 minus $47,000 equals $4,000. So your profit gives you a cushion, but the floor never moves.
And what happens when you break it? When your equity drops below that maximum loss threshold, even by the few dollar, auto liquidation trigger, all trade are closed immediately as the market breaks.
And again, like with the daily loss, if there's volatility or slippage, your account might close out below that line. That's just execution reality.
And more importantly, once it's breaks, that account is permanently disabled. You will need to purchase a new packet if you want to continue trading. No reset, no rollback.
And alright, let's get tactical. How do you actually trade inside the rule without consistently worrying about it?
And first, track your total close losses every day. You should always know how close you are to your max loss floor. Don't wait for the dashboard warning. Calculate it manually.
A second, use your profit at rotation, not permission. Don't just floating profits at green line to extreme rate. Instead, consider locking in gain by reducing the loss size when you have.
Third, manage your floating loss aggressively. Even if you are positive overall, a single trade with poor stop placement can take you from safety to shutdown in a few minutes.
And fourth, stay cool when you're close. If you're down 5% out of 6% limit, that is not the time to double down. That's the time to step away, pause and rethink your entries.
And the biggest mistake, underestimating floating drawdown. Traders close three loser and think, okay, I have to grab the room, but they forget about the 4 trade floating minus 1,800.
Second, traders who trade recovery after a bad day, they lose 4% in one day and come back swinging the next day thinking don't make it back, and instead take another 2% boom violation.
The third and the one third, ignoring slippage during major news, even with a tight stop, new candle can get you traced through your limit.
And the max loss rule is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know sees their stop loss, whether personal or institutional, as a non-negotiable boundary.
Right, it's a reality check. If you're consistently brushing up against your max loss, the problem isn't the rule, the problem is your system or your psychology.
As WeMasterTrade, we will not giving capital, we are teaching structure, and the max loss rule is what separates gamble from professional. So remember, your max loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equities, not balance. It includes both closed and floating losses, and once breaks, your cash is gone. Coming up next, we will explore the consistency rules. Why steady profit matter more than big spike when it comes to growing, scaling, and getting paid.
And if you have make 5,000 in one day and then make 200 and make 40, and wonder why your payout got flat, the segment is for you.
Let's dive into the rhythm of profitability and how to stay consistent under WeMasterTrade model.
Alright traders, we will talk about the daily loss limits, and we just cover the maximum loss rule to pillar to protect your capital. But now it's time to give shares just a little and talk not about risk but about results. Because here things is not just about staying alive in the games. As WeMasterTrade, we want to see new traders grow, scale, and actually earn. And to do that, you need more than just a winning days. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky spy from a reliable trader. It tells us whether you can make money over time or if you're just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawal, profit sharing, even scale up. So if you're fun and you're wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profits, the lower your ratio. The less consistent, meaning you have one giant profit days and then smaller or losing days, the higher your ratio.
The idea is simple. If 80% of your total profits came from one day, that's not consistency, that's luck or risk. What we want to see is traders who make profit day after day, even if it's small. That's what we can scale.
And how it is calculated. The formula is really straightforward. Take your bad trading profits and divide it by your overall profits. Since you start with the count, then multiply by 100.
As the formula is the best day divide total profits multiply 100 equal profit consistency percent.
And just to be clear, best day refers to your highest close profit in a single calendar day, and total profit is the sum of all of your close profits minus any close losses or over losses across the life of the account.
And let's say you had the following result over 5 trading days. Day 1 as 100, day 2 200, day 3 minus 50, day 4 100, and day 5 60.
That means your total net profit across 5 days is $410.
And your best day was day 2, that's a 200 profit.
So now we apply the formula 200 divided 405 equal to 0.4878 multiply that 100 and you get profit consistency ratio at 48.78%.
Now let's say your account requires 20% profit consistency, which is common. This trader is way above that, so it wouldn't qualify for a payout yet.
So even though these traders are profitable, they are not consistent enough. They have one big day that makes up almost half of their total profit that is not sustainable, and that's not what we're looking at.
And this is where I really want to speak to traders. If you're relying on 1 or 2 big days to carry your entire account, that's not professional trading. That's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who show long-term dollars are the ones who get scaled up, get freer, and who get trust with more capital.
Alright, so let's address the numbers. What's an unacceptable profit consistency ratio?
Typically, the rule is that 20% doesn't mean your bad days not exceed 20% of your overall profits. Let's say you have over the limit. Don't panic. You're not disqualified. You just need to keep trading even out the curve.
Here is how to do that. First, trade smaller size for a few days. 2, take smaller control wins, aim for 200, 300 days. 3, avoid big swing trades that could spike your ratio again, and the last one, spread profit across multiple days, not one monster setup.
And for those using EAs, monitor your equity curve. If your EA is skewing profit heavily into one day, you might need to rebalance it. The box might be profitable, but it won't pass the rules unless it's configured with payout logic in mind.
And some common mistakes to avoid. Mistake 1, trader hitting target early, then taking the rest of the weeks off. Other inflate your bad day, leave the rest of your curve flat.
Mistake 2, over trading after a big day, thinking I'm safe now and trying to squeeze more instead of averaging out that high ratio.
Mistake 3 is thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for in our master trading.
At the end of the day, this isn't about controlling you, it's about building habits that can handle scale. If you can't be consistent with $25,000, or what happens when we give you 100,000 or more?
Exactly, consistency is one way you stay in betting. At WeMasterTrade, we fund trader, but we also study them. This will tell us whether you're sure about long-term trading.
And we will see this time and time again. The traders who respect the rules, they are ones who get multiple payouts, referrals, and grows into six-figure funded accounts.
So don't forget this rule, understand it, use it as a feedback tool. If your ratio too high, right, that means you got your profit. Now keep going, balance it out.
And remember, you don't need calculated manually. WeMasterTrade dashboard calculates your profit consistency ratio automatically. You can track it anytime under your statistic tab.
And to recap, this rule is about the balance, not volume. Aim to keep your bet day under 20% of your total profit. Spread your wins across multiple sections, and monitor your progress in the dashboard. We work through the daily loss limits, take the maximum account loss, and examine how profit consistency affects your long-term payout and growth. And now we'll write the finals and perhaps the most overlooked rule of all.
The risk consistency rule, or what we call the discipline test. Traders often think the biggest enemy is the market, but truthfully, it's inconsistent, especially in how much you're risking from one trade to the next.
This rule doesn't look at how often you win, it looks how stable your risk is and how professionally you're managing your position sizing. And if you're sure about scaling at WeMasterTrade, this rule is non-negotiable.
Let's break it down. As its core, the risk consistency rule is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
And that includes all losses associated with that trade idea, both closed losses and floating losses. Even fees, commissions, and swap are counted.
And for some account like the 51010 novice packet, this rule got even stricter. Their limit is 1% per trade idea, not 2%.
Because consistency isn't just about the outcome, it's about the process. The more erratic your position sizing is, the more volatile your equity curve becomes, and that's makes your hard to scale.
This rule protects both you and the firm. It helps preserve capital, prevent lost equity swings, and make sure your edge plays out over time.
Typically, as your account has met, if your position size pulls up and down, your profile lost one day, follow the next. This is some plugin, not structure that cover.
This is where it gets technical, but stay with us. The term trade idea isn't just one other, it's a group of trades that share the same logic.
If you open 3 positions on XAUUSD gold at different times, that's one trade idea.
Because it's the same signal, same direction, global at the same time, if you open them at different times, they are seen at a single and 5% from the risk perspective.
So the system doesn't look at your trades in isolation, it groups them into logic bundle and apply the 2% rules across the entire bundle.
You can have multiple separate trade ideas as long as each one respects the risk limits.
For example, if you go long and grow, short by GBP, JPY, and short on AUD/USD, and each position had its own distinct directional side, there are 3 separate trade ideas, and each one can risk up to 2%.
Let's say you go buy on gold and you go buy and against. You now have 3 positions in the same direction or the same axis.
Yeah, the system treats as a one trade idea, so it combines floating risk or eventual loss from the position as a 2% of your starting balance, and boom, you broke the rule.
Let's go hand on. Suppose you have a 100,000 accounts 2% max risk per trade idea means you can lose more than the $2,000 on any trade idea total.
So you open 2 go-buys, 1 lot each. You don't place a stop loss. News hits, market drop 100 pips. Each lot lose $1,000. That's $2,000 total.
You're right on the line. If slavery or swap at a few extra dollar, that's a rule broken. Account flagged or liquidated depending on enforcement model.
And on some accounts, especially instant funding account with stricter tolerance, these breaks may result in loss of funded status or immediately closure.
And here are some pro tips to stay rate consistent. Tip 1. Set your loss size based on the account risk, not emotion. Know how many pip equal 2%.
Tip 2. Use stop loss order religiously. Set them based on risk per trade idea, not random chart levels.
Tips 3. Without calculating combined rates. Just because one position is below 2% doesn't mean risk of them are.
Tip 4. Label your trade idea mentally. If you're entering on the same setup, just add this one, assign it accordingly.
Tip 5. If you want to split an idea into multiple entries, do it smart. Scale in smaller, use micro loss if needed. Keep the total exposure below 2%.
And the most common reason traders break this rule, stacking until in try as one trader thinking is still separate.
Second, opening high-risk trades after wins, assuming they're playing with house money. Spoiler, the market doesn't care.
The third is neglecting floating loss. The trades may not be closed, but the floating rate still count toward your 2% risk.
And why we enforce this rule? This isn't just policy, this is professional practice. Hedge funds follow this, banks follow this, real traders follow this.
Exactly. We're not here to micromanage you. We're here to protect your account, our capital, and integrity of the community.
And traders who internalize these rules, who understand that small, consistent risk is the foundations of scalable capital, those are the ones with growth. Those are the traders who go from $25,000 to $1 million.
If you want to be a professional trader, you have to think like one, and professional traders always know how much they're risking on every trade every day.
And if you're still guessing your loss size or opening trade because setup feel right, take an exercise, set it up and get started.
This is more than the rules, it's a habit, build it now, and the path to bigger capital and longer payout become way more predictable. And that's, my friends, wrap up the 4 essential rules of trading as WeMasterTrade include daily loss, maximum loss, profit consistency, risk consistency. Master D, and you are not just staying compliant, you are building the foundation for serious capital management, long-term payouts, and scaling. And you are watching the official WeMasterTrade live stream. Alright traders, before we end this incredible section, we want to bring everything full circle, because today wasn't telling about how WeMasterTrade works. It's about showing you what it means to trade with quality, with capital, and with confidence. And here is a new thing in the markets we bring to you today.
More capital, more room to trade, bigger loss, higher rewards without ever putting your own money at risk.
And that's exactly what the WeMasterTrade Scout plan is built to provide your roadmap from being small account trader to managing a 1 million funded account. It's not fantasy, it's clear path with your 5 milestones.
And the Scout plan is our performance-based growth program. As you trade well, meaning you hit your targets, avoid violations, and demonstrate risk control, we increase your capital allocations. In other words, you can earn more room to trade without spending more out of pocket. And let's be clear, this isn't tied to subscription models or gimmicks. You don't pay for scale up, you earn it through consistency, profit, and discipline.
And the scaling out reps, we're talking doubling, tripling, and eventually scaling your order weight to 1 million in funded capital, depending on your where you start.
At WeMasterTrade, we offer two types of scale plan depending your account type is percentage-based scaling and amount-based scaling.
Let's start with the percentage-based plan. You begin as an evaluation trader level 1 with 100% of your base account. Hit the 20% profit target with profit consistency, and you promoted to level 2 where your capital increased by 50%.
And from that, the row is wide. Level 3 at 300%, level 4 at 600%, level 5 at 1,200%, level 6 at 2,400%, and finally the mark of 1 million.
And for each level, you don't just need to hit the profit target, you also need to complete at least 2 payout cycles. So the system knows you are not just performing, you are stable. And the other scale-up plans is amount-based scale-up breakdown by funded size. And the level 1 begin at $10,000 to the level 9 is $1 million. Each step has its own profit targets, usually 10 to 20%, and some levels require profit consistency, especially in early stage. Once you beyond level 3 or level 2, the level 3 or level 4, the consistency required drop, and this becomes all about the raw performance and this get right. So the next one, we will bring you the market news today.
Okay, Scarlett, today we got 3 key US data released to watch. The first one is called durable goods order month over month, which comes exactly as forecast 0.2% and trend from the previous month. Since it excludes the penetration item, the rating is more stable indicator of underlying demand. The fact that I met expectation and remain flat suggests stable business environment, but not strong enough to signal significant economic acceleration. Overall, a neutral signal for the USD.
Right, Helen, but when we look at the broader duration goods order, the data showed minus 3.8%, which is much better than the previous minus 9.4% decline. Even though it's still negative, the slowdown in contraction indicates that the manufacturing sector might be stabilizing after a sharp drop earlier. This could help limit recession fears, although markets might still see it at a side of weak business spending overall. For risk sentiment, is a slight positive compared to last month's step decline.
Exactly. Moving on to the consumers' sentiment, the CV Consumer Confidence Index dropped from 97.2 to 96.4, slightly slower than expected. But it's not dramatic for it, so that the U.S. households are feeling a bit less optimistic about the economy. Since consumer spending are big drivers of GDP, and it suggests that a step-down decline in the confidence could weigh on growth prospects. The software rating could put some pressure on the dollar in the short term.
And lastly, the Richmond Manufacturing Index improved significantly from minus 20 to minus 11, although it's still in negative territory. That tells us manufacturing conditions are still contracting, but the pace of decline is easing. Markets may interpret this as an early sign that the sector is bottoming out. If upcoming regional reports confirm this trend, it could support the narrative of gradual stabilization in U.S. manufacturing.
So to sum up, data today is unique. Core duration good are flat. Headline orders show improvement despite staying negative. Consumer confidence leads slightly, and manufacturing contraction is easing. From a trading perspective, the USD may not get a strong pull in either direction, but we could see the short-term volatility, especially around equity and bond market.
Yes, traders will probably keep their focus on upcoming jobs and inflation data for clearer direction. For now, the dollar's moves may remain range-bound, with sentiment-driven reaction to these mixed signals.
And that is for today's live stream. So thank you so much for tuning in, and we will come back with the next live stream later. See you again.
We copy trade.